Well, good morning to the West Coast, Central, and Mountain time zones. Good afternoon to everyone else. My name is Brad Etheridge, and I'm the Chief Marketing Officer for the Center for Tax Strategies and Resources. Glad to have you with us here today. We've got a really interesting topic in the email that we sent you. We were kind of talking about the difference between mega producers, how they think, the words they use, the timing. We've got one of the very best in the industry with us today, and he's the founder of the Center for Tax Strategies and Resources, Simon Singer. Simon's going to share his insights on a lot of key topics, how to think, what words to use, and how to take your presentation skills all to the next step. One of the things we put in the write-up was, 94% of the business written in the U.S. is written by only 6% of the overall advisors. We all have the same tools, we all have the same products for the most part, but how they're put together, how you think about them, how you explain them to the client, how you time is the difference between a 6% producer or a 94% producer. So Simon will share his insights there. For those of you that don't know much about the center, we are a membership-based organization. We're not a broker-dealer, we're not an IMO. Professional advisors, asset gatherers, annuity specialists, CPAs, even tax attorneys join our group to be able to pick up the overall strategies and skills to be able to take their practice to the next level. I think you'll kind of understand why they have that availability once you have Simon go through his presentation. You find out a little bit more about an event we have coming up here called the Academy, and I'll talk to you in a few minutes about that. So enjoy the presentation. Nice to have you with us, and I'm going to turn it over to Simon.
So change your thinking, change your words, change your life. And I'm very, very serious about this. This is a bit of historical learning that I think is going to be very interesting to a lot of people on this webinar. So what can you expect from this little talk? Number one, how to gain access to new clients. Number two, how to create strategic alliances with attorneys and CPAs. And I do know how to spell with. It's just misspelled up here where it says wit. What do you say to get them interested, whether it be the client or the professional advisor? And how do you get them to actually take action? So, question, does anyone on this call have a product or a strategy that everyone else doesn't have? I don't think so. Does anybody have tax law that everyone else doesn't have? I don't think so there either. Does anyone have strategies that everyone else doesn't have? The answer is we all have the same products, we all have the same tax law, we all have the same strategies. So it's how you time combine and sequence them that make for an exponential result. It's how you get to discovery. It's how you get people to participate. Now, something I want to warn you about, don't get overwhelmed. I probably should have done this at the beginning of the center's program today. I used to sit in these meetings and there was so much information, I would get so confused, and then I'd forget, and then I'd get intimidated, and then I'd get depressed. So what I learned from one of our coaches is to come up with some kind of a process so that we can assist you in being able to retain as much of the information as possible, and more importantly, to highlight the pieces that are most important to you. It's called 12-3-1. The 12 stands for, during these 3 days, what items are going to be of significant interest to you that you think you might want to actually get more information. So put a little square next to it, next to that particular item. And if you come up with 12, or if you come up with 14, or if you come up with 50, it doesn't matter. But you want to highlight that's the most important. And then you want to take those 40 or 50 or 12 items, and you want to put a check mark of the 3 that are really important to you, that you're really thinking that you want to get more information on. And then lastly, highlight, yellow highlight, the one item that you're going to do something about tomorrow, so that this will kind of clear up. There's so much information, it's like drinking out of a fire hose. Those are all excuses. It's really important that you use the 12-3-1 process and make it a process, and it won't be a problem anymore. So here's some questions for you. Do you know where your next client is coming from? It's a major problem in our industry, in the accounting industry, in the legal industry, and the assets under management business. I've had CPAs and tax attorneys tell me, man, I'm overwhelmed. I don't need any more business. And yet I go to a morning breakfast of one of these leads group, and there they are sitting there. Well, if you have all the clients you need, if you have all the business you have, why in the world are you sitting in one of these meetings? Nobody knows where their next client is coming from. Do you need more ideas or do you need more prospects? Do you want more time, more money, or more fun? If not, if the answer is no, I don't have any of those things, you need to become experts in communication, in the art of questioning, in objections, and in collaboration. And I'm going to mix into this presentation some statements, some observations, some questions, some answers to objections, all kind of wrapped up together. So preparation versus presentation. It's really important. The more I prepare, the less objections I have. The more I prepare, the better my presentation is. So it's not just about a good presentation. It's about the preparation that went into it. Every time I over prepared for a client meeting or a meeting with a new advisor that I was hoping to create a strategic alliance with, every time I was over prepared, they never asked me a question that I was concerned about. But Lord help me, every time that I wasn't over prepared and I wasn't even fully prepared, they always come up with stuff that I find very, very difficult. So that's one of the things about controlling the controllables. John Wooden, who's a famous for the young people on this call, John Wooden was a Hall of Fame member as a basketball player in college and a Hall of Fame member as a college coach, coaching the UCLA Bruins in the middle 60s to the middle 70s. And his teams won 10 NCAA championships. He coached teams with absolute superstars, and he coached teams with average players. And he had an 88-game winning streak and won, as I said, 10 out of 11 national championships. And what was interesting is when the season would start, he would have all these high school All-Americans coming into the gym to show this old man just how physically talented he was. And he wouldn't let them show their talent at the beginning. What he would do is he would spend all kinds of time, a couple of days, actually a couple of hours on a couple of days, showing them how to do things that they could control. So for instance, blisters was a major problem. So we'd show them how to roll their socks on, how to wear 2 pairs of socks, roll their socks on to avoid blisters. He'd show them how to double tie their shoes so that in a very important time in a game, their shoe wouldn't come untied. Now remember, these kids are sitting there desperately trying to show this old coach how physically talented they are. So it's really, really important to control the pieces that you could control. John used to say, and I was fortunate enough to have lunch with John a couple of times as I sponsored a dinner for the City of Hope, and he was the honoree. And I had hoped to have lots and lots of his old basketball players show up. And come the day of the seminar, not the seminar, the dinner, I didn't have any confirmation from any of them. But when 6 o'clock came around and the dinner was to start, all of a sudden these very large people just started walking in, including Kareem Abdul-Jabbar, because they had so much respect for this old man coach who really looked upon himself as a teacher, not as a coach. And he was very respectful, and he had his rules, and they had to abide by his rules or they were going to be off the team. So Bill Walton was one of the great centers of all time in college. He's the one who had an 88-game winning streak. Kareem Abdul-Jabbar was another one of his. And he had these rules that you had to practice, and you had to show up well kept. Your hairs had to be cut. You couldn't have a beard, et cetera, et cetera. And he would periodically get pushback by some of these great stars, and he didn't care. The reality was, I've got my rules. You either live by them or you don't. Sidney Wicks was another one of his players. Sidney comes to him one day and says, Coach, I don't think I'm going to practice today. And Coach Wooden would say, well, you don't have to practice, Sidney. And he said, well, yeah, but if I don't practice, you're not going to let me play. He said, no, Sidney, I'm not making that decision. You know the rules. You don't practice, you don't play. You practice, you do play. Sidney would say, well, you can't tell me I can't play. He said, Sidney, I'm not telling you you can't play. I'm telling you we have rules. The rules have to be the same for everybody. And if you don't want to practice, then you're not going to be able to play. So eventually, after a half hour back and forth, Sidney decided he was going to practice. Sidney played. They went on. They won another national championship. So another controllable is to profile the strategic advisor and then profile the type of client and then use language as a tool. So here's my first controllable. Be well introduced. Profile your target, obtain a proper introduction, and the way you get that is by asking. A client might refer you to them, you might have to ask. A professional advisor might refer you to them, you might have to ask. But like everything else, it starts with you asking proper questions. So when I'm in the midst of an engagement with a new client, I will always say to them, do you have a professional advisor? Do you have a CPA? Do you have a tax attorney? Do you have a business attorney? Whether the answers are yes or no is not relevant. What's relevant is I want to let them know that I want to include in this planning process anybody that's important to their decision-making process, including their brother-in-law who happens to have an insurance license, because that's what I do for a living. Because I know what I've learned over the years is if I don't take them into account at the beginning, what's going to happen at some point in time, they're going to come out of the bushes and start picking me off. I would rather split cases with somebody and make them a part of the process than all of a sudden lose the case because their wife's brother has to be included, otherwise he's not going to be able to come home at night. Very important to understand who the team players are and who the potential adversaries are. You have to script the introductions for them. They don't know how to make the proper introduction. So we script introductions for people and let them, and hopefully they abide by them, because if they just pick up the phone and they say, hey, Mr. Attorney, I got this great insurance guy I want you to talk to, that's probably not going to work. But if he says, I've got this planner that's helping us put together a more full and complete financial estate and asset protection plan, and I want you to know that he's not been brought in to replace you, but we think he brings a unique skill set to the table, and ask you to give him your full and complete cooperation. So in considering that, we wind up getting a lot more buy-in from some of these folks. Let's see what's next. Never go in without a proper introduction. I've been licensed for years to do continuing education seminars for attorneys and accountants. I did one, and I kept it on my bio for years. I don't have it any longer, but I did one, and the reason I didn't do any more was because of the fact that what I was getting was third and fourth tier CPAs, and what I wanted was I wanted the number one CPA, the Rainmaker, and he didn't show up for continuing education. So I stopped doing it, but I did many of them within a firm themselves so I could present things that they needed continuing education for, start creating relationships, etc. But never go in without a proper introduction. Setting the stage. This is really important. It's the most important thing to remember. And we've got a little short video to show you, to give you an example of the importance of setting the stage correctly. Joshua Bell is a world famous violinist who plays a $3 million Stradivarius, makes over $1 million a year, and people pay hundreds of dollars to listen to a single performance. They took Joshua Bell and they put him in the bowels of the Washington train station with the same music, with the same violin, with the same music holder, and have him start to play. And what you're going to notice off of this video is almost nobody stops and pays any attention because the stage was not set correctly. So when you go see a movie, you saw coming attractions, you read a critique in the newspaper, there was something that got you to pick up yourself, get in the car, and go see this movie. Well, the same thing happens with Joshua Bell playing this $3 million Stradivarius. If the stage isn't correct, people don't pay attention. Okay, so that's kind of an example of how important setting the stage is. It's really, really important, and you don't get a second chance to do it. Important to set the stage. So why did that come on? Let me get that off. You don't need to see me. Okay, so how can you create relationships with CPAs and attorneys? Well, I can tell you what we've done. You might try it. It will likely work. But the one thing I can tell you is when you get that appointment to talk with their attorney and their accountant, don't talk about yourself. Talk about them, talk about their practice, talk about your mutual client, but don't talk about yourself. Don't make recommendations, ask him questions about what he thinks of the various strategies. So first of all, obtain a proper introduction. Second, a client might refer you to professional advisors. Like everything else, it starts with asking questions. So I might say, tell me what you know about defined benefit pension plans. Tell me what you know about sales to defective trust. Tell me what you know about self-canceling installment notes or legacy trusts, et cetera. I'm not saying it to be argumentative. I'm saying it because I really do want to know what they know so that I can better include them in the conversation, better include them in the planning process. Meeting a new CPA. This is a little frustrating because they don't understand our industry. They don't trust our industry, and that's probably with a great level of justification. They don't trust us. They think we make too much money. Why should they refer you to a prospective client, and what's in it for them? Well, what I used to do is I used to walk in, talk about myself, talk about my company, talk about my products. It was all me, 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 me. What I do now is I go in and I ask them about their practice, and I ask them about what their goals and objectives are, and I ask them about things they know and things they don't know, because we've got resources. I don't want to be the smart guy. I want them to understand that they too are alone, just like we are. And some professional advisors may not be willing to admit that they need something. So it's up to us to help them uncover some wants, some needs, and some desires. It's exactly the same interview that you conduct with a prospective client. It's all about them. I did an article years ago about how doctors are the best salesmen that we have in this country. If you think about the process, you walk into a doctor's office, and the first thing that happens after that little window gets slid back is this woman behind there who's probably making $25 an hour hands you a clipboard with a bunch of papers on it that you're supposed to fill out and hand back to her. And they include some very personal items, including, not the least of which, is how are you going to pay for this visit? Well, by the time I hand that clipboard back to that secretary at the front desk, if she wants, she can know more about me than my mother does. And so it's really important to understand that stage one, the doctor got a bunch of information from you without ever meeting you. Stage two, they put you into a room and a nurse walks in and she starts asking you a bunch of questions also, some of which you've already answered on that form, some of which were new. She'll take your blood pressure, she'll take your height and weight, she'll listen to your heart, she'll listen to your respiration. You haven't even seen the doctor yet. And by the time the doctor walks in, you've undressed emotionally and physically in front of two strangers. Now the doctor walks in. He asks what your symptoms are. And then he says, well, we're going to have to run some tests. It might be an MRI, it might be a CAT scan, it might be an X-ray, but the fact remained is he doesn't have enough information, so he might have to take some blood tests and some additional tests. They haven't made a diagnosis. They haven't made a recommendation. They haven't come up with a treatment plan. What they've done is discovery, 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 which is the same thing that we're suggesting that you evolve your practice to. The more information you can get, the more likely they are to hit on something that you can help them with. Do they want more information? Do they want more resources? Do they want more time? Do they want more money? Do they want more fun? Because a lot of professional advisors won't admit that they want more money, but more time requires them making more money per client or more client hour. More fun might be taking off at 3 o'clock in the afternoon and watching their kids play Little League Baseball. More time might be I get rid of some C and some B clients who are a pain in the neck, but I need them to pay the bills. It all comes down to money. Money gives them the time to take off at 3 and watch their kid play Little League Baseball. Money is what helps them get rid of those clients who are just not fun to work with. But they may not admit it at being money, but they might admit with regard to more time and more fun. So what kind of questions do you ask? Well, you might ask a professional advisor, what do your clients think you do? You see, there's a disconnect between the client and between the professional advisor. The client thinks their CPA not only knows everything about the tax code, but if there was something different that they should be doing, that they would be getting a call from the CPA with some recommendations as to what they ought to do. So when you turn around and ask that client, when's the last time you got a call from your professional advisor with a piece of prospective advice to help you save taxes? Almost always the answer will be never. So what do your clients think you do? The client might think you do estate planning. You've got a brochure out in the front office that says you do estate planning, but you're telling me right now you don't do estate planning. And if you do, I've got a presentation that I think you're going to see later in these 3 days about the 5 ways to pay estate transfer costs. You see, a CPA to a CPA doing estate planning is basically the orderly transfer of assets from one generation to the next. They don't think about where the money is going to come from. We think about where the money is going to come from. So there's a disconnect as to what the clients think you do versus what you really do. How do you charge? Do you charge hourly? Do you charge by project? Do you do value-added billing? It's important for us to know that, because one of our jobs is going to be is to help them generate additional revenue. So we have to know what they're comfortable with. The next thing is that they want more time, more money, more fun. You go through the same explanation that I did earlier, only you do it in question form. And what about your own retirement? How are you funding for your retirement? How are you going about buying out your senior partners? Where is the revenue coming from in order to be able to do it? The answer might be, well, we're just going to take the revenue that he's been generating and we're going to use that as a buyout. And saying, okay, but who's going to service those old clients? Are you going to do it yourself, in which case you're not going to have more time, you're going to have less? Are you going to hire somebody else, in which case you're going to need to generate more revenue because all you're doing is replacing assets and time? Where are the revenues coming from? And buying out your senior partner, there's a video that we've got where one doctor is telling a new doctor that the new doctor is part of her retirement plan. Well, that's probably not something really exciting to that new doctor, that what she's doing is funding a senior partner's retirement. What are you doing to accomplish these items? Where is this thought process coming from? Because once you start talking about their own situation, you're talking to a prospective new client. And if you want great recommendations to new clients that right now you don't have access to, try doing some things that will help that professional advisor with their own finances. You'll find that the referrals come hot and heavy after that happens. So actively listen. Actively listen is not just not talking. I can remember hearing the discussion of, you ask a question and then you shut up, and whoever talks next loses. I don't agree with that. Actively listening is trying to understand what somebody has just said, asking clarifying questions. So, I heard you say such and such. Tell me why that's important to you. Tell me what that means to you. That means different things to different people. Tell me what it means to you so we can be on the same page. Then ask deeper clarifying questions. After they've given you a statement, again, ask them that. Why is it important? How would that change your life? What are you doing to accomplish those things, et cetera, et cetera. So actively listening is a big deal. Value what you do. They need us more than we need them. We have a unique skill set in this industry, and we're basically being a top of the table or a Forum 400 member, having the same exact tools, the same product, the same tax code, the same strategies. It has to be in the intangibles, and intangibles are difficult to communicate. Well, one of the main intangibles is valuing what you do. Another one is asking questions until the client just won't answer any longer. And because chances are we're going to run into another one of them, it's almost impossible for them to run into another one of us. Because if there's 50,000 licenses in the United States and 500 of them qualify for the top of the table, that's 1/10 of 1%. Chances are they never ran into one of us. and most all of the really high level producers do things in a variation, but pretty much the same way. If you don't believe in yourself and in your value and in your system, trust me, they're not going to believe it either. Here's some observations. Appointments lead to discussions of retirement, asset protection, long-term capital gains, estate planning, and each of those leads to potential engagements and potential sales. People do what they want, when they want, with people they trust. We're going to have a speaker later on today who's going to talk about know, like, trust. Really important to be able to first get to know them, have them like you and you like them, and then trust is built over time. It's not an instantaneous thing. Once you've gotten the CPA interested, where do you go next in the process? Well, we created something called the FOR program, Facts, Opportunities, Results. It's basically a system that first defines what the facts are, then explores what the opportunities are, and then shows what the results are. We've probably got 15 of them now, but there's pension IRA enhancements, investment alternative, income and estate plans, tax and retirement plans for small business owners, large business owners, tax and retirement plans, leverage estate plans, terminally ill estate plans, zero estate tax plan, highly compensated employee tax and retirement plans. And we'll have some speakers talking on most of these subjects, but let me give you an example. This is the one called Pension IRA Enhancement Plan. Enhancement meaning that we have to enhance the results based on what our discovery said the client is trying to accomplish. So here were the facts. A couple in their mid-60s, what you're going to notice is some of the numbers and the taxes are not consistent with what they are today, because I've used this same thing now for about 20 years, facts, opportunity, results. So don't get in a tizzy because some of the tax numbers aren't correct. But the couple in their mid-60s, $2.5 million in an IRA rollover account, income of which they would never need. So you might ask a CPA, how many of those kind of clients do you have? Their total net worth, about $10 million. Their objective was they wanted to maximize the amount of money to heirs without risk and without invading their current lifestyle. So here was the opportunity. These extremely conservative investors were highly disturbed when they discovered that after income in respect of a decedent, that's income tax on that $2.5 million, and estate taxes, the $2.5 million in their IRA would only be worth about $750,000 net to the heirs. So the opportunity was, I got $1,750,000 of taxes that are going to diminish this $2.5 million account. And remember, they wanted to maximize the amount of money to their heirs without risk and without invading their lifestyle. Well, here were the results. Collaboration and creative planning gave us the opportunity to substantially reduce the income tax down to about 15%, by the way, while eliminating the estate taxes altogether. The result is $2.4 million is now available to go to the heirs without any further tax dilution, $1,550,000 of taxes saved, and $80,000 of additional revenue to our strategic partner. So I didn't tell them how. I told them what the facts were, what the opportunity was, and what the results were. Their first question is going to be, well, how did you do that? And I'm going to say, well, it depends. They'll say it depends on what? And I'm going to say it depends on facts and circumstances. I don't know enough about the situation yet to tell you exactly how. All I can tell you is there's at least a half a dozen different ways of doing it. And go on to another subject. Now, I'm not going to spend time going through all of these. Here's another one, investment alternative estate plan, investment alternative income plan. I think maybe I'll do that one. 82-year-old couple, conservative investors, $5 million on a tax-free bond portfolio, average yield 4%. It produced $200,000 per year in income, net worth $15 million. The client needed more income for maintenance of lifestyle. Client was risk adverse and did not care that half of the $5 million bond portfolio would be confiscated by estate taxes. The opportunity was create a process whereby the client was able to increase their cash flow to $600,000 from $200,000 lifestyle requirements, and with less risk and greater diversification. Well, 4% on $5 million is $200,000. 11 or 12% will produce $600,000. Well, how could I do that? Well, I could create a single premium immediate annuity and move the $5 million into that, produce 12%, and that'll produce $600,000 per year. no risk, guaranteed income, less risk. So the results were, with our strategic partners' help, we were able to create a structure whereby the couple's cash flow was increased by $400,000 per year, or $6,500,000 of additional cash flow over their lifetime, while generating $80,000 of added revenue for our partners. Well, you might say, well, how are you going to generate $80,000 of additional revenue for our partners? Well, we're doing an analysis. The analysis needs to be opined and validated by the CPA. In this case, maybe they're receiving commissions, maybe they're not receiving commissions. It doesn't matter. The only thing that matters is full disclosure. So if a CPA is going to charge $80,000, he's going to have to do the work involved for $80,000. That could be due diligence on the insurance company. It could be due diligence on whether or not the 12% is really guaranteed. It could be, how does this affect the rest of their life? How does this affect their lifestyle? How does this accomplish the goals? The bottom line is, would somebody pay $80,000 one time in order to generate $400,000 per year extra guaranteed for life? The answer is most people will, not everybody.
Seems like a good spot to cut in here a little bit and let everybody know about our upcoming event. We have the Center for Tax Strategies and Resources Live Academy in Las Vegas at one of our favorite hotels, and that is going to be on May 11th through the 13th. For those of you that haven't been to an Academy event, it is 3 days of people. I mean, nobody's like Joe Strazzeri, but people of Joe's caliber. We'll talk a little bit in a minute about what folks are going to be speaking and what they're going to be covering in topics, but it is 3 days of absolute unbelievable information that will help you bring better solutions, write larger cases, get a better understanding on how to lead with tax savings, as well as the use of proper language to help you to motivate the clients to make the right decisions. So this is probably, in my 37 years in this business, it's one of the very few meetings I've ever gone to where nobody ever gets up and leaves until break. And then when break does happen, everybody's out in the hallway talking. So a wonderful way for you to keep your independence and be independent, but not alone in the industry. So again, that's coming up May 11th to the 13th. We run from 8 to 5 on days 1 and 2. We run from 8 to 4 approximately on day 3. Sometimes the questions that you bring up when we interact with the subject matter experts means we might be a couple, 3 minutes late, but we try to stay kind of close to the schedule. One of the evenings, in fact, I believe it's the first evening, we have something that we do in the evening also that's just a riot. We have a private club across the street from the Westgate Hotel, and we're having an outdoor pool reception, a wonderful dinner, and cocktail reception, appetizers, and then we're doing one of our favorite things later in that evening called a fireside chat, where you come in and ask questions, talk about specific cases you've done, listen to what other advisors say. It's just a round table, very informal gathering, but we bring a few experts out there and enjoy a little company together, and I think you'll get a real big kick out of it. Right now, the early bird pricing's in effect, and it's $499 for our members. And for those of you that aren't members of the organization yet, it's $699. What that covers is it covers the 3 days of events and takes care of the dinner and the cocktail reception. You cover your transportation and the hotel, but we've got a really good room block at the Westgate. I think we're 120 something a night. It's on our website. By the way, that room block is filling up quick, so I would suggest, if this sounds like something that could help you move your practice forward, if you choose to join the organization or attempt to apply for the organization or not, you will still walk away with an unbelievable amount of information, even if you choose not to become a member of the group. If you come to the event and you decide it really doesn't seem like it was of value, you didn't pick up any ideas or concepts, come and see me. I'll be there. I'm more than happy to refund what you paid. This is, by the way, I've made that offer for 4 years and nobody's ever taken us up on it. So it is a great value and it's a lot of fun, and we have a very good time doing it. So again, that's the May 11th through the 13th. For more information, you can give us a call at 877-258-2837, or, and we'll put this back up again at the end, or you can email us if you prefer at thecenterteam@yourctsr.com. Why don't I show you just a few folks that are going to be speaking here. These are already confirmed speakers. We've got Harlan Acola, who is a national expert on reverse mortgages. Something I never really wanted to know much about, but it turns out there's such an amazing planning opportunity, and Harlan knows how to do these properly. And the members have had really amazing success working with Harlan for their clients. We've got Ken Buckley, who's going to be talking about a premium financing concept that he has put together and run for several years. He has a very unique way of how he does premium financing, including how the premiums are paid back in and the timing and segments. So very interesting presentation. Paul Chella is going to, as a disability insurance specialist, he's got ideas and concepts that you can take to medium to large size groups, loves working in the medical field, creates some really nice cases. Brian Edelman came and spoke to our group before, and he is a nationally recognized cybersecurity expert. Scared the pants off everybody on how careful you have to be these days, and with what's going on in Russia and Ukraine, obviously, more and more chances for cyber hacking. He has systems in place and talks about finding weaknesses in your current system, what to do about it. I'm going to talk about a couple of interesting new concepts with you. You'll see me talking a bunch. Bruce Gendine is a pension plan expert. He's going to come and talk about how to put together most optimum deductible pension plans. Bruce Gibner is a tax attorney out of Los Angeles. He is one of our permanent faculty members. Bruce is probably one of the top 5 smartest tax attorneys I've ever met. You're going to meet a couple of them at the event coming up. Bruce Gibner, like I said, Rick J., who's an employee savings program expert. Kevin Jerry. Oh, this one's fun. Kevin has a couple of concepts that are put into place called tangible property tax methods. Creates huge deductions for your business owner clients. Like the other services that we have, you can use these services as a member, get a couple of years of tax returns reviewed for your client without the client writing a check up front. If the numbers come back and the deductions are huge, the client didn't know about it, or their CPA didn't make them aware of those, they can use their existing counsel to fix it. They'll tell you exactly what it costs to put the plan together, and you'll decide if you want to propose that to the client. If you do, the tax attorney will meet with you and the client to install the tax savings. So it's a really cool thing. Nobody had no risk up front, but create some great dollars to be able to provide for other financial services products. So it'll help you to create your budget for those clients' needs. Kevin Knebel, LinkedIn's most recommended business speaker. Guy knows more about sales and electronic relationships than anybody I've ever met. I couldn't even begin to explain for those of you that haven't met Kevin how amazing he is in his strategy. So he's going to spend a bunch of time with us. Alex Melkos, a national annuity product specialist, going to talk about some ideas and concepts, let you know what's out there that you may not be aware of. Don Quante is a long-term care specialist, which was never a big part of my practice, but it is now. He has some techniques in place to make it just seem unbelievable why a client would not take advantage of the long-term care, especially the way that they can pay for it. Dr. Vicki Rackner is our permanent faculty member. She also is the head of our Doctors Academy of Economics. She can show you how to get into the medical market, how to be more effective. She spends a bunch of time with everybody on and off stage. Love Vicki, so she'll be there with us. Simon Singer, the founder of the Center for Tax Strategies and Resources. Joe Scherzeri. Dan Zeppelin has an amazing approach to senior settlement that what makes it unique is if somebody does have a policy that they don't need or isn't necessary, or they bought it for reasons, or it's getting to a point where they can't afford it, he can take it to the secondary market. But what makes Daniel very unique is the way he does it through an open auction. It creates some very nice payouts back for the clients if it's the right type of client. So it'll kind of show you how that works. So again, that's going to be May 11th through the 13th in Vegas. You can register by going to our website. You can type in the Center for Tax Strategies and Resources and click on the upcoming events tab. And I think also, in fact, I'm quite sure of it, we're going to be sending you out a link to that immediately following this call.
So it's going to be tax and retirement plans for small business owners, large business owner tax leverage estate plan, terminally ill estate plan. I'm scrolling through this quickly because we aren't going to have time to spend on all of it. So getting to the prospect. I dislike the question the CPA almost always asks. What kind of client are you looking for? Well, the reason I dislike it is it could be discretionary income, not just their gross. If they're making $1 million and spending $1.2 million, that's not a prospect for me. If they're making $1 million and they're spending $300,000, that could be a creation of a prospect. It could be their net worth. If they're worth $25 million and they're concerned with estate taxes, or they have other assets that can be converted to the type of work that I do, that becomes a prospect. It could be a estate in excess of $23,400,000, and it could be how much discretionary income do they have. So we created something called the data miner. And the data miner is basically a system that goes into every kind of tax return, the 1040, the 1120, S corporations, C corporations, partnerships, etc. And it dumps information into something that we call the data warehouse tool. And what pops out of that is estate planning strategies, is income tax saving strategies, is qualified and non-qualified retirement planning, is assets under management and investment strategies, and charitable planning. Now, we're not allowed to actually have access to their tax return. And the accountants have a rule by the AICPA that they can't use information inside of a client's tax return for any purpose other than doing their tax return, unless the client signs an agreement. If the client signs an agreement that says they can access for planning purposes, then all of a sudden they can have access and they can supply information to us. But this is what the output of the data miner looks like. And let me see if I can make this a little bit bigger. So if you'll notice, we don't have a client name, we have a client number. We don't know what the code is. We can solve by date of birth, we can solve by their ages, we can solve by their filing status, we can see what their adjusted gross income is, what their taxable income is, what their tax before credits, before wages, partnerships and corporation, business income. It'll give us anything we want. But if what I'm looking for, let me do this again. If what I'm looking for is tax-free income or net worth, I'm going to have to do some interpolation. So for instance, if somebody is taking a required minimum distribution of, or somebody's taking retirement income of $40,000 per year, now that $40,000 could be the only $40,000 that they have. It also could be 4% of $1 million sitting in a qualified retirement plan. And if the accountant has an understanding that this individual's net worth, because he's done financial statements for them in order to obtain some real estate loans, then I can pretty much interpolate that they aren't going to need that $1 million to maintain their lifestyle. But the important thing is it helps me answer that question of the CPA, what kind of client are you looking for? Now, this is available to members. The partner that I have on this, Joe Koenig and I, we charge $5,000 per CPA firm, and we take 10% of the case. But to be honest with you, we actually hope that you never have to use this and just use it as a tool to get the CPA interested. That's what it's about. So asking questions. Learn how to turn compelling statements and or observations into questions. Does that make sense? And that's what I just did. I took a compelling statement, learned how to take compelling statements and turn them into questions. Asking questions assists you in building rapport, in gaining confidence of the advisor and the client, and most importantly, in collecting more and better data. Actively listening, it's not just not talking. I've got this here for a second time for a reason. It really is important. Most of us are pretty good at asking first level questions, but not in asking clarifying questions. It's the information in between the lines, not the information on the lines. No strategies until all goals and objectives have been absolutely clarified. Leading with strategies is a big mistake. Observations. Just because a client or an advisor asks a question does not mean that you need to give them an answer. They might say, well, just like I said before, well, how did you create that result in that 4 program I discussed earlier? And I said, well, that depends on facts and circumstances. I don't have enough information. Can you help me understand a little bit more about the client? What kind of net worth do they have? You know, how much their lifestyle is, et cetera, et cetera. Ask them another question in answer to that question. Why is that important to you? Help me understand why that's going to change their life. Never provide conclusions without comprehensions and full understanding. And most importantly, and I learned this lesson in I think it was 1978 or 1979 in Youngstown, Ohio, with a client that was set up perfectly for all the things I do. If I remember correctly, he was spending $120,000 a year. He had net practice income, or actually, it wasn't a practice. He had net what he did for a living income of a little under $1 million. He had $5 million of retained earnings in his C corporation at the time. The penalty for having more than $250,000 of retained earnings without a business purpose, the penalty, including taxes and interest and penalties, was about 92% of that $5 million. And he didn't have any corporate purpose. He had a profit sharing plan that was contributing $30,000 a year. He was a prime target for a defined benefit plan where he could contribute $400,000 or $500,000 a year, and something at the time that was called Retired Lives Reserve, which eventually got adjudicated out of existence. But they grandfathered everything people had done if they were over 65, and he was 70 years old. In any event, I made the mistake of giving him all the answers at our first appointment. I knew exactly what he should do, and I know you've all been in that situation. I gave him the answers, I gave him the strategies. He said to me, well, if it works like this, how come my other advisors, my attorney and my accountant haven't told me about it? And I went, I don't know. They know you better than I do. They know the law at least as well as I do. Maybe I just, paid more attention to you. I could have packed up my briefcase and walked home at the time. What I would do today, and by the way, they put the kibosh on me, but not on the strategies. The tax attorneys and the CPA fully implemented oh, by the way, he had $1,800,000 of cash surrender value in a $2.2 million life insurance policy with New York Life. Ben Feldman was his agent, which was kind of intimidating, to be quite frank with you. But if I'd have just said, very interesting set of circumstances, rather than my telling you what to do, will you authorize me to go talk with your attorney or your accountant? And I would have shared the information that I discovered. I would have gotten a letter of authorization and a fee agreement from the client. I would have shared with him the information that I discovered from the client and asked the professional advisor what he thinks we ought to do. And then after he gave me little or nothing, I would say, well, do you think a defined benefit plan would be appropriate? I'm not recommending it, but do you think that would be appropriate? Do you think a retired lives reserve would be appropriate? And what they would do without the client in the room, they would share with me that they didn't know anything about it, they did, or they talked to the client and the client didn't want to do anything, et cetera, et cetera. But I wouldn't have stepped on their toes. I wouldn't have embarrassed them, all of which I did. I would have gotten them paid, which I didn't do. In other words, everything was based on what I did versus what I didn't do. And I screwed up that case, which should have been worth about $800,000 in commission to me in 1979. And it was the most painful lesson that I ever had in this business, but it completely changed how I conducted my practice. I don't make recommendations to clients anymore without their professional advisor being involved. And if they don't have a professional advisor, we're going to get them one, because this is too important for them and too important for us. So never provide conclusions without comprehension and full understanding. Talking about tax deductions and tax saving leads to more appointments. Done beats perfect every time. And I demanded that it had to be perfect. All I had to do was say, I just need to take a couple of extra steps. So by the way, 1984, I get a call from the client. Same guy. By the way, prior to that time, I'd been back and forth to Youngstown 5 times. I had about $10,000 invested, hadn't received a nickel. I get a phone call out of the blue. He said, that defined benefit plan you got me into is really causing me a problem. And I'm thinking to myself, the defined benefit plan I got you into, I made the recommendation, but I didn't implement it. He paid a firm called Conahan & Conahan in Hawaii $25,000 to set up this defined benefit plan, which we could have gotten done at the time for $2,000 or $3,000. And I said, well, what kind of problem have you got? He said, well, now there's this excise tax, and I don't need the money. And the excise tax, if I remember correctly, was 15% in addition to income tax, which was about 70%, and estate tax, which was 55%. I said, well, what did Paul, that was the name of the tax attorney, say that you ought to do? And he says to me, that Paul said that what I should do is invest the retirement plan assets in low yielding investments, and that'll reduce the tax. And I started to laugh. And he said, what are you laughing about? And I said, well, based on that advice, what you should do is buy investments that lose money every year. That'll reduce the tax even further. I thought that was really funny. Client didn't think that was terribly funny. There was this long pause, and he says, okay, I see what you mean. When can you get out there? I'm on the plane again, another 5 times, another 5 zeros, all because I didn't understand the psychology of dealing with a professional advisor, which I've become a master at ever since then. So done beats perfect every time. If you focus on the solution, the prospect will focus on the cost. If you focus on the problem, the prospect will focus on finding solutions. It's really important to understand that. Meeting a new prospect. You've got 5 seconds to get 50 seconds, to get 50 minutes. Understand that. If you don't say something meaningful to attract attention in that first 5 seconds, you're not going to get the 50 seconds. And if you don't get the 50 seconds, you're not going to get 50 minutes. So let me share with you, I call this the golf course discussion that taught me what to say and what not to say. A half-hour meeting on my time and getting an introduction letter. So I met somebody in a golf course, and they mentioned to me they're thinking of doing a 401k plan. Can I help them? In the old days, I would have been at his office before he was out of the locker room. I'd been in his office waiting for him, desperate to meet with him. What I say today is I'm not sure I can do that. And they'll say, why not? And I'll say, well, we only work with clients of high-level CPA firms and maybe tax attorneys. Have you got a CPA? The answer will usually be yes. Have you got a tax attorney? The answer will normally be no. And I'll say to him, well, let me tell you what I'm willing to do. Not rushing to his office. Let me tell you what I'm willing to do. I'm willing to spend a half hour of my time without charging you, inferring that I normally would charge them. A half hour of my time to gather some information. And if I can do something that I think might be helpful, then you're going to have to engage me for an hour of my time to go visit with your CPA. Now, when in the world would anybody not be able of getting a significant amount of information from that client in a half hour where he thinks I'm doing him a favor by not charging him for the half hour on the phone? The answer is they'll always give you enough information. And then the letter of authorization that I'm going to get from the client to the CPA is I've hired Simon Singer and his firm, the Advisor Consulting Group, to help us put together a more full and complete financial and estate plan. I want to assure you he has not been brought in to replace you, as we value the things we've been able to accomplish together. We just think he brings a unique skill set to the table and ask that you give him your full and complete cooperation. Sincerely, John Q. Client. Armed with those pieces of information, I'm now a fee-based planner who's been authorized to go talk to their professional CPA, and I'm going to start that process of getting information from the CPA about his practice, what he does, what he doesn't do, what he's talked to the client about, what he hasn't, what the responses have been, etc. Had I done that with my Youngstown, Ohio prospect, I would not have suffered that $800,000 loss, because every single recommendation I made, they just did it with somebody else. They didn't do it with me, because I embarrassed the CPA, I stepped on the CPA's toes, and I inferred he didn't know what he was doing. Had I brought him into the mix and let him know that I was an adjunct business development department, that, in my opinion, never would have happened. So meeting a new prospect, 5 seconds to get 50 seconds to get 50 minutes. Get that introduction letter that I just referenced.
Hey, Simon.
Yes, sir.
Quick question. Have you been anywhere near Youngstown, Ohio since then?
And that's a hateful question, Brad.
I saw you. I flew with you one time when we flew over it. And you looked a little sick to your stomach.
Yeah, I've been to Pittsburgh, I've been to Philadelphia, I've been to Cleveland, but anytime I get near Youngstown, now the client today would be like 115 years old. But what the thought that goes through my head is, I know I can get in this time. But the chances are, I probably wasn't going to be able to get in this time, because I wasn't going to be able to undo the damage I did with the professional advisors the first time.
Listen,
that's the lesson to be learned.
Bottom line is that 800,000 you lost, that would be, a lot more today, was worth every single penny. I mean, you've made 100 times that amount because of that event.
It turned out to be the best investment I ever made, but I didn't look upon it that way at the time. But over the years, that's 50 years ago, 40 years ago, over the years, I've been able to finally understand that it was my screw up. It wasn't theirs. I didn't understand the psychology of working with professional advisors. Professional advisors lived up to what my thought was. They're deal killers. They killed this deal until I realized it was my fault and that I could correct that. Once I was willing to accept personal responsibility, I could go about looking for what the issues were. What could I have done differently? And I just described to you what I could have done differently. And more than likely, I would have had a different result because the client loved me. He loved what I was telling him, but he wasn't going to go against the advice of his professional advisors. Had I brought them into the fold and made them part of the planning process and gotten them paid, the client would have benefited, the advisor would have benefited, and I would have benefited. It'd have been a much happier trip. By the way, he even came out and visited with me, and we had dinner one time because his father was an old age home out here. Okay, creating goals and objectives. I can't even begin to tell you how important this is. Can't even begin. It's your roadmap. It tells you where you want to go. We want people acting as a tour guide, not as a travel agent. A travel agent takes orders. You know, I want to go to New York and I want to fly and give me the best rate and tell me which airline I'm flying at. If I'm a tour guide, I want to find out what class of service. I want to find out how long they're going to be there. I want to find out what hotels, what class of service of the hotels. I want to find out what ancillary events they're going to want to attend. Do they want to go to a ball game? Do they want to go to a show? What restaurants? The more I can find out about them, the more I'm going to be able to control every single piece of that. And I can't find out without the goals and objectives. So for instance, most clients want to treat their client equally. Want to treat their children equally. But what they don't understand is you can't take a business that's worth $10 million with one child working in the business and two children who are completely disinterested and give each of those children $3,333,000 without creating family disharmony. But I've got to know that I've got one child in the business. I've got to know one child has special needs. I've got to know one child is a professional baseball player. I've got to know all of this stuff in order to be able to feed it back to them in a systematized way so that they understand that I was listening and here's the issues that they've created by trying to do that. I mean, how do I take and divide a house in thirds without them selling it? How do I take my automobiles and divide them in thirds? I can't do that. Well, they haven't given that thought. They just know I want to treat my children equally. And the only way equally is, you know, to sell everything. Well, no, there's another way, and it's called life insurance, or it's called, you know, give them more of a different kind of asset. But they haven't thought their way through, just like in Joe's presentation earlier, where they haven't thought about those 5 or 8 methodologies and all the various ways there is of accomplishing certain type of things, but not necessarily everything. I'm going to show you an example of a case later on. I'm not sure if it's tomorrow or the day after tomorrow. So creating goals and objectives, it's your roadmap. No strategies until goals and objectives have been fully embedded and you have absolute clarity. Find objectives and concerns. The sale is never that simple. Anytime I don't have objections in a sale, I'm always frightened. I'm always worried about when is the next shoe going to drop. There are always objections. There are always concerns. And if the client doesn't realize that they have objections and concerns, I need to point them out and or create them, because that will create credibility. It will also bring things to the surface that they might have been hiding. We don't lose sales to people that say, hey, Brad, you're full of baloney. It doesn't work like that. We lose sales to the objections that the client never verbalized. Hear that again. We don't lose sales to people that say you're full of baloney. It doesn't work like that. We lose sales to the objections that the client never verbalized. And we do also, by the way. That means we didn't do a very good job of discovery. Learn how to turn compelling statements and observations into questions. Ask questions. It builds rapport. It gains confidence, collecting more and better data. I know it's here a second time, but it's here because it's so important. Questions, questions, questions. Questions on estate or asset protection planning. Have you analyzed which asset to distribute at what time and in what order in order to increase the value to your children or charities or any other group of people? Do you think estate planning is all about taxes? Well, it's not. It's the right asset to the right person at the right time with the least amount of tax. After you're gone, will your children talk to each other? We had a furniture manufacturer worth in the $7 million figure, who in his will had made his son the head of the company and the two daughters each owning 1/3. The son owned 1/3. He did all the work, and they sat back and criticized. And at age 50, the trust said all of the stock will be fully distributed, and the son stuck a gun in his mouth and killed himself. Now, there was drugs involved also, but after you're gone, will your children talk to each other is a big deal, because the patriarch, the matriarch, they're pretty much in control while they're still here, but when they're not here any longer, all of a sudden, there's another spouse that has some input. There's another series of advisors that have some input. It's a really important thing to discuss with them. It took a lifetime to build your estate. Doesn't it make sense to take a few moments to preserve it? Equal and fair are not necessarily the same. For instance, how do you divide a car or business into thirds? Do you know the difference between ownership and control? Successful estate planning requires a client to understand that they don't have to own something in order to be able to control it. And they don't tax what you control, they tax what you own. So in a perfect world, you own as little as possible and you control as much as possible. Did you know that you already have an estate plan? It's the government's plan. It's the default plan. It's the one that maximizes the amount of tax. Wouldn't you rather maximize the value of your assets and leave a legacy as opposed to your heirs having to pay a tax? Wouldn't you rather let 1% of your estate pay the tax on 100% of your estate? Does your current estate plan reflect your values or the values of your advisor? I've heard tax attorneys tell people, well, what we do is we set up a three-tiered. You pass 1/3 of the estate to the children at 25, 1/3 at 30, 1/3 at 35. And the client thinks that that's what everybody does. So if you're involved, you need to say, well, I understand that's what the norm would be, but do you think your children are going to be ready at 25 years old to receive a large chunk of money? I would love to own the Porsche dealership outside the probate court to be able to sell, $125,000 red Porsches to a kid who just came into a lot of money. And parents are also very frightened about their kids becoming trust babies and not being responsible. There are ways to be able to use trusts and partnership in order to create incentives as opposed to free gifts. Have you researched opportunities available in your estate plan the same way you would research opportunities for any other important business solutions? Who would you rather put your plan together, you or theirs? Theirs is the IRS. Took me a while to figure out what that was. That's why I put it in red. We can assist in protecting your family from divorce, bankruptcy, business reversals of your children. Would that be of interest to you? There should be an if there. If we can assist in protecting your family from divorce, bankruptcy, business reversals of your children, many times we'll start talking about asset protection, which, by the way, has similar components to estate planning and estate taxes, what you own versus what you control. And dad might not be terribly happy with that tennis bum the daughter is thinking of marrying. And you want to keep the family assets and the family bloodline and protect your family against a bad business decision, a bad marriage, etc. That can be done with proper legal structure. Ask questions regarding retirement. Do you know how much liquid capital you would need in order to be able to retire and maintain your after-tax lifestyle while indexed for inflation? The answer is they never know what that is. Are you on track, or do you have a deficit? Using one of the softwares that we have available, which happens to be Wealthy and Wise, provided to us by Insmart. And it's probably the best piece of software in the industry. We're able to get a very steep discount as opposed to what you could have and buy it on your own. If you've got a deficit, what are you doing about the deficit? How are you going to make it up? Which mistake would you rather make, having too much money or too little money? If we make mistakes where we'd rather, what if they get rid of estate taxes? Then your children will end up with more assets than they would have had there been estate tax. It's not terribly important. What if they change the tax law? Count on it. They're going to change the tax law. And it's not just going to be this time around. It's going to be with the next Congress, the next president take office, because that's what their job has become, getting reelected. not doing things in the interest of the country, despite the fact that that's what they would like to make us believe. How are you going to pay off the mortgage on your retirement assets? They'll say, what mortgage? And I say, well, I see on your financial statement, you've got $5 million in your retirement plan. How are you going to pay off that $2 million mortgage? They're going to say, what $2 million? I said, actually, I made a mistake. How are you going to pay off that $3,500,000 mortgage? He said, what are you talking about? I said, well, you don't get to spend $5 million. First, that money gets subjected to income taxes. Right, in today's world, in California, that's a little over 50%. Second, whatever's left over is going to be subjected to estate tax. The total is about 75%. How are you going to pay off the mortgage on your retirement assets? Isn't it better to have it and not need it than to need it and not have it? Which is more important to you, the return on your money or the return of your money? That's an old Will Rogers quote. Return on your money versus the return of your money. The type of investments that you have, are they with or without guardrails? Meaning, are you protected if the market takes a tank or real estate starts to lose value? Ask questions regarding business. How much money would you take out of your business if you didn't have to pay tax on it and your CPA agreed? Let me say it another way. How much money would you take out of your business if you didn't have to reach into your pocket to pay the tax and your CPA agreed? What is your exit strategy for your retirement plan assets or your business? What's your strategy for exiting the business? How would you like to be in business? This is a buy-sell agreement question. How would you like to be in business with your partner's widow, her attorneys, her children, their attorneys, her new husband, his children, their attorneys? That's what the lack of a buy-sell agreement takes. Did you know that if business capital can't be used to absorb the tax will absorb the business? Isn't it better? We just did that one. Why do you think you're here? I open up all my appointments with new clients and new advisors with, why do you think you're here? And let them talk. What does estate or income tax planning mean to you? What have you accomplished in minimizing those so far? What do you like or dislike about what you've been doing? If we were sitting here a year from today, what would you like to have happened in order for you to feel that it was financially you're better off? If you don't do this, what will you do? Here's some general questions. If what you thought was true turned out not to be true, how quickly would you like to know? Have you maximized the leverage of your exemptions, both your annual and your lifetime? Did you know that sometimes the biggest price in the world is doing nothing? Did you know that many people did nothing wrong? They just didn't do anything, and that's what was wrong. Did you know that failing to decide is actually a decision? Here's some questions regarding taxes. What's your largest expense? They might say their mortgage, their spousal support, child support. The reality is we can get them around to understanding that taxes are their largest expense. Did you know that capital gains taxes are voluntary? How much do you have in your retirement plan? How much do you have in your retirement plan in your IRA? How much of it is yours? Did you realize there's a mortgage or a lien against that asset? Here's some insurance questions. I know you believe in term insurance, so do I. Do you want temporary term or permanent term? Or I could say, you know, I'm not licensed to sell term insurance. Why did you buy the term insurance? The answer almost is because it was cheap. And I'll say to them, and you can document this for yourself, and maybe I'll document it for you in one of the presentations, but that $1 million of term insurance, that I don't care if you're 50 years old or 20 years old, that $1 million of term insurance is going to cost about $3.5 million between now and life expectancy. And at the end of that time period, when you're 85 years old, there's not going to be any insurance in force. You'd have spent a cumulative total of $3,500,000. There's no equity. You'll get back nothing. That if I can take that same that same $350,000 and apply it to a properly structured permanent life insurance contract, when I reach 85 years old, my $1 million of insurance will probably be worth about $1.5 million, and I'll have about $800,000 of equity. Now tell me which one was cheaper, the term insurance for which you spent $350,000 and got back zero, or the permanent contract for which you spent $350,000 and got back anywhere between $800,000 and $1.5 million, depending on whether you wanted to terminate the contract. Do you want to pay for your term insurance with pre-tax or after-tax earnings? Do you want to buy your term insurance at retail or wholesale costs? Do you know how much your term insurance really costs? The best marketing materials that you have in your portfolio is my own tax reduction plan. That's one of the things that we do. That's what Steve Pasek did. That's what Walt Dallas, tax attorney, will talk about a bit later. Your own pension plan, your own family limited partnership, your own corporation, your own family foundation, your own cash value insurance, your own annuities. Because when you can say to somebody, I'm not asking you to do anything that I'm not doing myself, your level of credibility jumps by leaps and bounds. And that's what I would suggest. Bradley, what do you got?
Again, we've got our Center Academy live, May 11th through the 13th. It's at the Westgate Hotel, the old Hilton where Elvis played for years and years. It's a great hotel. We've used it several times. Run from 8 to 5 on days 1 and 2, 8 to 4, day 3. Register. You can go to register by going to www.yourctsr.com under the upcoming events tab. And I know I said this before, but this just really is something that you do not want to miss, because I don't know of anywhere else in the industry personally, and I've been doing this 38 years, where there are so many resources brought together for the sake of training versus pushing product. You know, the organization, the Center for Tax Strategies and Resources, is about education. It's about getting resources in front of you that can help you to meet more clients. We have lead source generation, we have training, we have proper use of words with proper timing, and we have people like Joe Struzzeri and Bruce and everybody else that I mentioned that are going to be there, are there to help make you better at what you do. So go ahead, if you want more information on the center, give us a call. We'll have one of our team happy to talk to you, 877-258-2837, or you can give us a ring at your center team, the center team at yourctsr.com. Thank you again for your donation. The association definitely appreciates it, and hopefully we will see you soon in Las Vegas at the Academy. Have a great day.